I've never seen so much bearishness. There's never been a time when 60% of economists forecast a recession. And when everyone's on one side, I get very wary. I think there might be some really surprises next year. Let me tell you, 2022 was marked by very good job growth and very poor GDP growth and very poor productivity growth. Firms were hoarding workers because they worried they couldn't get them. I think we may see the opposite next year. I think we might see actually the job market loosen up dramatically, even job losses, but that GDP grows much faster than most people think. And we have a chance, if the Fed pivots, to really avoid a recession and have a good year for profits. Because if productivity comes back, Scott, that puts downward pressure on prices. It puts upward pressure on margins. And, everyone who says, oh, my goodness, these 2023 estimates are way too high, might be surprised that many of them might turn out to be what profits are going to be.
Well, I listened to everything you just said, and it all makes reasonable sense, I'm sure, to some who are trying to be as bullish as you obviously are yourself. But the four words that we need to discuss further: if the Fed pivots. Those are the four words you used within what you just said, because most people don't think, Professor, they're going to, and that seems to be the whole ball game, that the people who think that stocks are going to do better than many others keep talking about the Fed pivoting, where the Fed seems to be explicit in not only are they not done in the hiking, but they're going to keep rates up before they do anything for longer than people think. How do you respond to that?
I respond to that, Scott, because I was with you a year ago, a little more than a year ago now, the September 2021 meeting, where they said, oh, we're not raising rates in 2022. They were very, very firm on that. Inflation was transient and it would be a mistake to raise rates. Why should everyone believe the Fed? When, in fact, the Fed has not done anything that they told us that they were going to do over the last 18 months. Now, I think when this data comes in, we take a look. We talk so much about what's going on in prices. I think the Fed is finally getting it, that its housing indicator is way lagged and that house prices are actually going down. And once you put in actual house prices in those inflation numbers, as I said 2 months ago, really inflation disappears. I think that's going to get through to the Fed. I think more people are going to be talking about it. And let me say, there's 200,000 expected gain in January. I'm not a prognosticator. If you get a job loss or a jump in unemployment rate to 3839, you're going to get a different tone from the Fed. They're going to get calls and saying, you know what? The last market that you're worried about, which is the labor market, is finally loosening up. And that is the last reason that they have to stay as tight as they are. And I think that message is going to get through.
Let's just be real here. You don't trust the Fed. You don't believe the Fed. You don't trust the Fed because of the mistakes that they made in the past. You think they're incapable of following through on what they say now.
I am very disappointed in the Fed. I said on your show and throughout that they started tightening way, way too late. I think they're loosening too late. I didn't even think the last increase was, called for, given the trends that I see. But it finally got through to them that they had to fight inflation, and I think it's finally going to get through to them, and it's a happier message that they can accept, that most of their battle is going to be behind us. The pressure is going to be when we see the job market loosen up. I wish it didn't have to wait that long, because I think, honestly, if they stay, if the Fed funds rate goes towards 5% by the middle of this year, I have to be less bullish.
But don't you think it's going to go